Hi everyone, this is Arif, and today we are here with another unit of CIE Part 1, Unit 9, which is about controls and application. This is a little bit brief about my career profile and my professional background. Just in case if you are interested, you can pause the video or we can connect over LinkedIn as well. Here we have the overall summary of the entire CIE Part 1 journey. All the areas that we cover in CIE Part 1. We started with the foundation of internal audit. Then we have discussed about two types of engagement, mainly the internal auditor, which perform assurance services, which is auditing, and advisory services, which are more of a consulting. We have also covered ethics and professionalism, which is basically the core of the entire internal audit activities, which basically give us the guidelines how we have to act and behave as an internal auditor. Uh, then we jump into GRC area, which is governance, risk, and compliance. We have covered several topics under governance, risk, and there were two units on controls, types, and applications. So today we will be covering the last unit of the GRC area, and after that we will just left with the last unit, which is about fraud risks. In this slide, we will be looking at the entire syllabus into different coverage percentages, how much we have covered so far, and how much is remaining. Plus, also, it gives us a reflection how many MCQs you might expect from each unit. Um, so far, we have covered approximately 85. With the end, by completing this unit, we will be somewhere close to 85% of the entire syllabus. Fraud risk, which constitute around 15% of the coverage, will be remaining. In terms of MCQs, we would be close to 100 MCQs that we will be um, uh, able to answer, or we have covered similar topics related to those MCQs in the previous units. Here, I would just like to give you a quick snapshot of what we have covered so far. In the first unit, Foundation of Internal Audit, we have covered what were the purpose of internal audit. We talk about internal audit charter. Then we have spoken about the independence and impairment of independence. And the last topic that we have covered was the role of internal audit in risk management. In Unit 2, Assurance Services, we have covered different types of audit engagement that we perform. For instance, third-party contract auditing, quality auditing, security and privacy auditing, performance auditing, and we have also touched base upon a similar concept related to assurance services, but more as a facilitator, control self-assessment. So we have talked about this concept as well. Similarly, in Unit 3, we continued different types of audit engagement to understand about different types of audit engagement. And in Unit 3, we cover operational auditing, compliance auditing, financial auditing, organizational culture auditing, and we have talked about a topic called management report reviews. This is what we cover, and these were the key areas that we have covered in terms of assurance services. In Unit 4, we have covered different types of advisory services that an internal auditor can perform, mainly benchmarking, and there are different types of benchmarking engagements or activities that internal auditor can perform. Apart from that, we talk about that internal auditor can give risk awareness and control related trainings. They can perform certain kind of due diligences, help the management in identifying control weaknesses in business process mapping. They can perform system development reviews and certain kind of performance management system reviews. So these are some of the key broader level advisory services that internal audit can perform. Then in Unit 5, Ethics and Professionalism, we have covered, there are mainly 5 types of activities or uh, characteristic that is expected from the internal auditor, that they should have integrity, they should maintain their objectivity in carrying out the audit reviews, they should be competent, they have the right qualification and training, they should do their job with proper due professional care, and lastly, that it is always expected that the internal auditor should maintain at all times confidentiality. So basically, in the Unit 1, we have covered the basic foundation of internal audit. In Unit 2 and 3, we have covered the assurance services that internal auditor perform. And in Unit 4, we covered the advisory services. Then we jump, what are the key characteristics of an internal auditor? I believe the topics are a little bit uh, ad hoc, and there is a little bit missing link. But if you look at the way I depicted the picture in the previous slide, you will know that ideally all the auditors supposed to have the ethics and professionalism. So therefore, it has to be after the purpose unit, and then we might have talked about different types of engagement that internal auditor perform. Anyways, this is the order that Gleim has put it forward in their study decks, and it doesn't make a big difference as long as you have the good understanding of the entire topics. In Unit 6, governance, we have covered basically some of the key principles related to good corporate governance, and we also talk about the organizational culture and how it impacts the governance of the organization. And also we have linked through the internal audit, because if people are incompetent or they are not well qualified, there could be more errors and issues in their work. So it has greater importance from the internal audit perspective as well. And we have seen that what is the role of internal auditor in governance. In Unit 7, in risk management, we have covered the key elements of risk management process. Furthermore, we have just touched base upon on 2 types of risk management frameworks. The first one is COSO ERM, and the second one is ISO 31000. Then in our last video about controls and types, we have covered different types of controls, and we have seen how we can classify in a different ways controls within the organization. We can classify controls, what are the senior management that they have their control, then the mid level and the operational level. We can classify into primary and secondary controls. We can classify controls as financial or operational controls, and obviously we have IT controls. So these different classification and different types of controls that we have discussed in our previous unit. And in our today's unit, we will be discussing about controls application. And in the next slide, I will be taking you through what are the key topics that we will be covering. So this is the overall summary, and just a quick recap and review that what we have covered so far. So you build a mind map that what we have covered and what is going to come in our today's discussion. In our today's unit 8, in which we will be discussing the second part of the controls, which is about control application, we will be covering mainly 3 key areas. The first area related to accounting controls, accounting cycle and controls. Here we will be covering the most significant processes and their controls and embedded controls within those processes. It is very important to understand this, because within the exam you might be given different kind of scenarios in purchasing cycle or in receivables, um, or through payroll cycles, and there might be some control deficiencies that you might be requested to choose the right answers So if you are not familiar with the key controls within these at least 3 to 4 processes, because cash disbursement is also part of the same process, you wouldn't be able to correctly choose the right answer. So just try to give a thought and also practice a lot of MCQs that might come in the practice guide, especially in terms of the different accounting processes. So mainly there are three: sales, receivables, and cash receipts. Then we have payments, payables, and cash disbursement. The third one is related to the payroll. This is the first section. The second section, we will be talking about management controls, some other controls that management have, such as policies, procedures, having the right kind of human resources, personnel, some accounting related controls like budgeting, reporting. So these are the controls which are in addition to the accounting cycle. The third section basically covers there are two internal control frameworks which we are discussing. The one related to business processes, which is COSO internal control framework, and the other one is related to IT governance, which is COBIT 2019. Here we are starting our next section within this unit about accounting cycle and associated controls. What is internal control? We have discussed this in very much detail in the previous units. However, to quickly run through or go through it quickly, it's basically internal controls are a system or a tool that help us to reduce the risk or to prevent any errors or wrongdoers from committing any fraud. So this is the purpose of internal control to manage the risk. Organization hierarchy are one of the important critical element in the internal control, because we divide the role and responsibility based on how we structured our organization based on the role and responsibilities, right? And one of the element that helps a lot or strengthen the internal control environment within the organization is segregation of duties. Segregation of duties means that we split one activity among different people, so one person cannot be able to commit any fraud. For example, if we assign one person in a purchase department who is able to raise a request, receive quotation, select the vendor, and make the approval on the payment, and is also responsible somehow for verifying the receipt of product. So for that person, there is a possibility that while giving so much of authority, if he wants to, he might be able to commit a fraud, and which we might not be able to know for a very long time. In order to avoid him or to give him any loophole within the system, what we do that we segregate the duties. So the person who requests is separate from the person who review and approve. The person who review and approve is separate from the person who authorize the payment or receive the goods. So this is how we try to ensure that the internal controls are functioning properly. However, these controls are effective only when we talk about an individual and not allowing an individual to committing any wrongdoing or fraud. However, if a few people or the people who are responsible within that activity all colluded together and try to commit a fraud, then it is sometimes difficult or it takes time to discover such kind of wrongdoings. Accounting cycle and the associated controls, which we will be discussing in the which we will be discussing in this entire unit, is about how the money is received and how the money is spent. This is the basic theme within any organization. So our major concern is Our all activity, whether we are giving us services or whether we are manufacturing our products, the whole controls are revolve around receiving the money and giving the money, and what the shareholders are interested that how their value is being protected and what is their value to in its regards to their profitability, right? So the key element in the accounting cycles are sales to customers, when we or sales to receivable, and then collection to cash or receivables to cash. Then there is another cycle of purchase to credit, when we buy something but buy on a credit, no, on a credit terms, and then when we have to make the payments. Also, we have employees within the company, so the payroll payments and all that is also one of the key element of the accounting cycle. So any control associated with these cycles are very much of a concern, and there is a lot of management attention on it. And we as an auditor also, we look into these processes in our audit, and we see whether whenever an activity is happening, be it in terms of sales, be it in terms of purchases or payroll, we see that whether these controls are being deployed within the systems in order to avoid any negative outcome. Uh, why? Because, for example, we haven't made a sale, but we recorded just to boost our sales numbers. So that we have to ensure that there are controls that the management does not do anything wrong. Or we have our sales return and we did not book in properly record. And what if we record a wrong number? Similar to that, we should not be paying more than what is supposed to be paying to our creditors, right? um, and what if we receive a wrong quantity of the material, and what if we overpaid for a product? What if we overpay to our employees or underpay to our employees? So there are a lot of controls, and these controls are not something you have to memorize. This is basically comes with the practice. Whenever you are an auditor, you study a lot of processes within the company. By default, you know that these are the key standard controls which apply within within uh, most companies. There are certain unique controls specific to each entity, but there are general practices that is being followed. So this is all about the accounting cycle and accounting control. In the claim book, you will find they have given you some big tables on accounting cycles and the associated control. You just have to familiarize yourself. So if an MCQ comes, so you know that what are the key controls in that activity, but you don't have to memorize. So here we are, some of the example of the management controls, which is also the third section of our unit. Within an organization, if you look at the way the organization is being structured and the role and responsibilities are being allocated to individuals within the company, this is all part of internal controls. Because first of all, as we have discussed earlier, that by assigning role and responsibility, we ensure that there is a segregation of duties. That if there is a possibility of giving or a possibility of an individual committing a fraud, just because that he has excessive authority, so we segregate that authority. It could be either through deploying more people within a process, or through review and through audits, or through approvals. So this is also a way of segregating or overcoming compensatory controls when the process in itself are very critical. Again, when we assign authority to people, it is also easy to assess their performance and to see that where they are lacking behind, and if there is a need for improvement, then we can guide them. Also, by having those clear job and responsibility, we know that who's doing what, we can follow up, and there is a harmony within the company. When everyone knows what exactly they are supposed to do, then everyone is working toward the achievement of the overall organizational level. However, there might be a possibility, and there is a possibility in which in fact happened, that each individual have come up with their own area of competence, and they have their own area of responsibility. They carry out their work so diligently and so accurately that eventually, when we combine the efforts of all the people, we are able to achieve the company's level targets or strategic objectives. It is also important that when we have a lean structure, there is less bureaucracy. It's more easy to follow up on people, and overall there is less cost in terms of supervision and monitoring. So this is some brief description about how the structure within the organization, role and responsibility help to enhance the internal control environment within an organization. The second management control is about policies. Policies you might hear more often with procedures as well. So procedures is the second step. Policies is the objective, what we want to achieve, and procedures are basically how we have to carry out the activity in order to achieve that objective, which is being stated in the policies. So policies are very important because these policies are derived from the strategic goals within the company. It also encompasses the laws and the regulation associated with that activity or with that company, and we want everyone to abide by these policies. Is in a simple way to understand is similar to how we follow the rules or how we follow the law. So it is the law or jurisprudence of a company. A policies is quite often I've seen that within the company there are two major issues. Either they do not have policies for all area of the business, or these policies are outdated. So when they are outdated, we need to update these policies to reflect the current circumstances, because organizations are very dynamic and fluid. They change over the time. Their primary objective change sometime. Their operations change. And what happened in the company that since no one gave too much attention to the policies, it remained in a locker or in a separate shelves, and no one bothers to review that whether these policies actually reflect the current stage and the current status of the organization and the way people are working. So policies are a living document. It needs to be updated, and the peoples need to ensure that they read and they abide by these policies and the procedure, because these policies in itself are a control phenomenon, a control mechanism by which we ensure that no one do anything wrong, and we are able to achieve our operational level targets, and eventually it leads to achieve the strategic level targets within the company. The next management control is the procedure. Similar to the policies, the procedures are the action plan, which give us that what are the steps that we are supposed to take in order to ensure that we will be able to achieve our objective, which is policies. These procedures, again, similar to the policies, needs to be updated as when it is required. There is a trick, or there is a thing that needs to be taken into care when drafting the procedures within the company, that it should not be so detail oriented that it defeat the purpose of people making or taking the right action. We don't want people to be so robotic that without even taking a realization of whether the action they are taking is in the best interest of the company or not. However, it should be balanced enough to let know people that what steps they have to take in order to protect the company interest, but at the same time they are free to use their human judgment as well. We have exception policies for that, and we have exception procedures for that within the company. Again, these procedures should not be overlapping, and they should we try to achieve a perfection, but it's always continuous process, where we try and see wherever there is a gap in the procedures, we try to fill those gaps. If we have a duplication, then we try to avoid those duplication. So it's an ongoing process, where the process owner themselves come up with that there are certain things in the procedure which has been provided in the document which does not conform or does not serve the purpose. So it's something where the individual can also have some kind of leverage and discretion to use or these procedures as given in the as given in the document, or they can use their decision making and also highlight if there is any need for improvement. However, the policy matters are very strict in nature. You hardly have any discretion, and if you want to raise your voice against any policy, then there is a formal procedure where you have to address, or where you have to escalate those issues, and it goes through a very stringent approval process. However, in the procedures you have some flexibility as long as you are there to protect the company interests and you are able to achieve the overall desired objective of that activity. Two more critical components of the management control is about human being, how we manage the human capital within the company, personnel or the employees of the company, and any controls related to accounting. And the HR related or the human resource related controls are basically embedded in that the way we hire the people, the way we treat them, and the way we let them go within the company should all be done fairly. We hire right competent people, we train them, we groom them, we assign them responsibility, we make them accountable for the achievement of the goals, and then we also evaluate their performance. We give them feedback where it is required, we provide them with the training opportunities where it is required. So this is all part of the internal control framework, and that allows the company to enhance its control environment. Accounting related controls are basically more related to the recording of the transactions, where we ensure that the any transactions that is being any transaction that has been executed within the company is fairly recorded, and there are controls associated in the entire accounting system. Generally, it is in computer systems, and everyone knows what their role and responsibilities are. Who's responsible to review? Who's responsible for approve? And these are the people who are reviewing and approving those transactions and recording with the right numbers. So this is all about the accounting related controls. Budgeting is very important within any company. Budget is basically where we pre-plan and we allocate the resources and see that who will be getting a small pie of the entire resources, and setting the targets and looking at those targets whether they are achieving those targets, they are or not optimally within the organization. So budgets are very important, and the control associated with budgets are very important, because we don't want people to under budget or over budget, or keep a buffer for themselves within the budget in order to make them relax while achieving those targets. So we just wanted them to be fairly represented, and ensure that there is more efficiency within the company, be it's in terms of getting more revenue to the company, or doing things in a more cheaper way and without having too much of wastages. Reporting is also one of the key management controls because we have different people and assign different responsibilities, and there are people who are being given the responsibility to supervise certain people. So they all want we wanted them to reflect upon that what they are doing is what they are doing is basically as intended and as required and as per the objective. Uh, and these reports needs to be on a timely basis, meaningful, accurate, economical, because any misleading information in these reports would lead to wrong decision making for those who are receiving those reports. So it is very important that the controls related to reporting as well needs to be well planned within the company. Some other management control assertions are occurrence that these are a few controls which we as a generally as an internal auditor we ensure in any transaction that whether these assertions are available or not. For example, whenever an activity has been recorded within the company that a sales has been done or a purchases has been done, we ensure as an auditor that the occurrence is actually happened within the company. That if we made a purchases, then a product has been received in the inventory within the company. If we made a sale, so we receive a cash from a customer, or we have a liability towards a customer. Um, uh, the customer has a liability towards us. So these assertions we test existence in terms of physical existence, or it is being provided for within the company in terms of writing, and that document or that evidence is available. Completeness in terms of that whatever we are showing in our records is basically the exact amount or the quantity of activity that has been performed. So we don't want that the numbers is overstated or understated. So these are the assertions which generally auditors internal be it internal or external, we look into these assertions. So this is also part of management controls. Last but not the least, slide of our presentation, the role and responsibilities are very important whenever we are talking about controls. The BOD, let's go through quickly. BOD, commitment to integrity and ethical values, needs to have a business acumen role. All of the board committees are important. So basically, uh, the board of directors at the very top level are responsible for internal controls by setting the right atmosphere within the company, the right tone within the company. They have to be the one who led other people by example, that they are very much concerned about that everyone do the right way, the things in the right way. So this is how it is being cascaded or reflected upon within the organizational culture. The management are the people who take that philosophy and ensure that all the tangible work of internal controls are being implemented within the company by assigning right roles and responsibilities, having proper reporting structure within the company, performance management or performance appraisal management within the company, variance analysis, risk management, internal audit, internal control. So the management is responsible to ensure that we have all these kind of safeguards within the company to achieve the desired objective. Internal auditor are also responsible. We are responsible because we provide an independent assurance on activities of the company, whether they are achieving their desired objective or not. But also we uh, we we also suggest them how to improve, how to minimize the cost, and also let the organization at times if there is a potential future risk to any of the activity within the company or overall to the organization, and see what are the controls or the key measures that the organization has taken. So in that regard, internal auditors have a very important role to play, and other personnel are, I mean, each and every individual is within the company is responsible for their area of responsibility, that they do their job in the good faith, with the right knowledge and skills, and with all honesty. So this is how an organization survive and thrive. So everyone is responsible for internal controls, but there are certain layers within the management that have more responsibility to overtake in terms of internal control. Before we start the third section about control frameworks, there is one big confusion a lot of people have, and I used to have as well, because COSO has two frameworks, and I used to wonder what are the difference between these two frameworks. One is a risk management framework, we call it COSO ERM framework, which we have previously discussed under the unit where we discussed the risk part of the GRC. And another sorry, and another control framework we have, which we are going to cover in this unit, which is in the next slide, which is about COSO internal control. So COSO has basically two frameworks. One is related to risk, which we earlier have covered, and the other one is related to internal control. So this clarity needs to be there before we embark on the details of what exactly is COSO internal control. Just to give you a brief snapshot without going into technicalities, because you can always refer to those videos on ERM and see the technical model, but just to give you an holistic conceptually understanding of these two frameworks. So the first framework, COSO ERM, which we have previously discussed in previous unit, is about enterprise-wide um, risk management. So how, as a whole entity, any company manage their risk. Whereas the COSO internal control frameworks talks about the day-to-day effective operations of running a company, because in the previous one we talk about how we can link the ERM with the strategy and objective of the organization and how we can achieve. However, in the current one, the COSO internal control, we talk about day-to-day operational risks and how we can manage those. Similarly, both are proactive. These frameworks help us to set the direction as long-term direction and day-to-day direction within the company. The first one is talks about a bigger picture and forward-looking risk appetite, strategy alignment, whereas the COSO internal control framework talks about the policies, procedures, check and balances on day-to-day operation. An easy example would be, for example, if you are sitting in Titanic, or if you're sailing in Titanic, so the direction where you are intending to move from one source place to your destination, and how many challenges that might come while you're sailing, for example, storms, running out of food, water, any pirate that may come across. So, all these challenges you will be managing by using COSO risk management framework. Whereas, how on a daily basis you manage each and operations, the engine room, the daily providing the food, so day-to-day operations that you will be that you need to manage, you will be using COSO internal control framework. So this is a brief snapshot which I wanted to give you an overview on before we go to discuss the technicalities and the model of COSO internal control. And I hope this would have given you some holistic view about these two frameworks. There are multiple control frameworks, but one of the few which are being extensively covered in the IIA course is COSO framework. Um, if you remember in the previous sessions, we discussed about COSO ERM framework, and today we will be talking about COSO integrated controls integrated framework. It defines the control definition. What is internal control? It basically the action taken by the management and the board in order to ensure that the risks are managed effectively and provide reasonable assurance on the achievement of organizational objectives in terms of operations, reporting, and compliance. That all these activities are being managed properly. What are the COSO controls objectives? You can remember these objectives by acronym OCR, which means or ORC, whichever order you use. O refer to operations, C refers to compliance, and R refers to reporting. That we have to ensure that we have um, enough controls where we achieve our financial performance or financial objectives. We drive our productivity, quality, we ensure innovation and customer satisfaction. So these are the elements where we have to have strong controls. In terms of compliance, our controls should adhere to all the laws, regulation, policies, guidelines. In terms of reporting, our controls should enable us to receive or to transmit the information in a timely manner, in a secure manner, and it has to be in a transparently being provided all the information and on a timely basis and concise, obviously. COSO, component for internal controls, can be remembered through the acronym as CRIME, which means that what are the key component of the internal controls. So control activities are like what are the key controls which are defined within any transactions or an activity. So those controls could be defined. Then we have to carry out the risk assessment that these controls are effective enough to manage those risks. Information and communication is one of the key elements of the good control framework, that it is being timely provided. Monitoring and the control environment. So monitoring means that we have to ongoing keep on ensuring that all the controls are effectively working, the risks are being managed properly, and as the environment change, we change our controls and we monitor our risk as well, because demographic risk could also change over the period of time. And control environment overall means that the organization have tone from the top and the organization structured in a more efficient manner. They have policies and procedures, people are aware, trainings are being provided, job description is there. So this is all part of the control environment. This is the graphical presentation of COSO control framework. Here you can see that all the key element of the control, the component of the internal control, control environment, risk control activities, information and communication, and monitoring activities are defined. Um, and it reflects that these all activity are performed to achieve the control objectives, which are operations, reporting, and compliance. That these three areas are effectively working, and we are ensuring all the risks are being managed. And this happen across the organization. So you can see the third side of the cube that where it says entity level, divisional, operational, and functional means these controls are being integrated and flow within the organization from top to bottom and bottom to up. So this is a very beautiful diagram which shows what we have discussed in the earlier slide. Again, here just to quickly go through what is control environment. So in control environment is basically the overall behavior and the action taken by the top management. in regards to the control environment, be it in terms of composition of the board, establishing of the different committees to focus on certain area of the businesses by the board members, reporting line to establish reporting line, to establish role and responsibility, to review their performance, to set benchmark standards in terms of policies and procedures, KPIs, KRIs, and to assess whether individuals are complying with those standards or not. So this is all part of the control environment. Risk assessment, when we talk about the risk assessment, which we also covered in the last sessions, risk assessment has a process in which we identify the risk, we assess the risk, we try to manage the risk, we prioritize the risk. So this whole activity of risk management encompasses, and this is also one of the key elements of the control environment. Control activities are basically how we manage those risks through through automated controls, through manual controls, through compensatory controls, through detective controls. There are different ways how you can manage those risks. Lastly, the information and communication. It is about that how effectively and timely and in the best possible manner we are circulating the information or receiving the information or synthesizing or processing that information. Information flow within the organization like a blood. So if you have a good control over the information, there is less likelihood that any adverse event can happen, because if there's a good culture within the organization and the bad news flows faster than the good news, so the action will be prompt, right? So it's similar to the human body, that if the blood circulation is smooth, there is the body is more strong to take to resist against any adverse internal or external virus. But if there is a problem in the circulation and the blood doesn't circulate to the valves, to the heart, then even angina attack can happen, right? Similar to that, within the organization, information plays a very vital role. Monitoring activities is basically that we have to keep on monitoring the controls, the risks, the overall structure within the organization. This is very much important because now we are working these days in a very dynamic organization. Everything is linked to another thing. The companies are affected by their competitors, by their political interference. There is a lot of factors that affect the organization. So therefore, we have to keep on monitoring. So this is overall and a key summary of what constitute the COSO control framework. Here we are with another control framework, and especially this framework is related to IT. It is very well known by the name of COBIT framework, and the institute which has developed this framework is the ISACA, again a very big and reputed organization, which stands for Information System Audit and Control Association. COBIT, which means that control objective for information related technology, is basically one of the framework which is used for managing all the IT activities. This is most commonly used and most famous one because it is very flexible. It can you can embed some certain other IT framework within this framework in order to ensure that there is proper governance in terms of IT. Every organization has IT systems, and even as an individual these days, we cannot expect ourselves without being part of the IT digital revolution. So how come an organization can be? They have ERP system, they have different apps in use, they have different machineries which are using IT. The information flows within the organization through IT channels. Therefore, it is very important that whenever we talk about control frameworks and control governance, we talk about IT as a very specific topic. So the COBIT framework has five principles, which is meeting the stakeholder needs. This is the one of the key principle, covering the enterprise end to end, which means because the information flows end to end, so covering the organization end to end. Applying a single integrated framework because you can integrate other IT frameworks as well within the COBIT. Enabling holistic approach to be more realistic and separating governance from management. So it clearly defines what are the governing part of the controls and who are responsible to manage those daily and control activities. Um, as we have said that it is a single integrated framework, which means that there are certain other frameworks which can be used while using a COVID. So it is very much used in the US, where we have a strict SOX compliance, that they use COVID as a framework to ensure that the SOX compliant, that the companies are SOX compliance. So they integrate SOX compliance with the COVID. In the SOX is basically financial control framework, and financial control, when we talk about, we use systems, ERP systems, so we ensure that we have a robust IT control framework within a place in order to ensure the integrity of financial data as well. So here we are at the end of the unit discussions on controls application. So earlier in the unit 8 we discussed about control types, and here we see that how controls we can apply within the company. So in the first section we discussed about how we look from the control perspective, business processes, the sales and receivable and cash collection process, purchases and payroll and cash disbursement process, and the employee payroll process. Apart from that, we have already discussed about some of the management controls such as policies, procedure, personnel, budgeting, various analysis. So these are some other types of controls which we usually have within the company. Then in the last section, we talk about two types of internal control framework. The first one related to the business and its processes, which is COSO internal control framework, which talks about how we can manage risk within day-to-day operations. And then we have talked about with specifically IT governance related framework, which is more applicable to IT, and the most famous COBIT 2019 framework. It had some previous versions, but those are no more applicable. Does that mean that there is only one type of internal control framework? No, there are multiple types, both for businesses and for IT governance, for example, ITIL as well, and some other as well. But here, from the CIA and from our exam perspective, these are the most prominent, and which even in my own experience I have personally seen when I was working in Telenor, that we were ensuring the compliance with the um, COBIT framework in our IT governance, in terms of acquisition, in terms of management of the IT infrastructure, in terms of incident management, so and also in terms of service delivery of the IT related service delivery as well. So we were using COBIT with some areas where we were using embeddedly the ITIL, which is not relevant, so I don't want to go into that detail. Apart from that, I've worked in many companies where I have seen that the ERM framework either is used. There are two mainly, the most popular one which is used. The first one is COSO ERM framework. In some companies, their risk management or ERM department embed that framework within their policies and procedures and the way they run their ERM department. And in some other companies, I've also observed that ISO 31000 is the framework which is being used. Apart from that, just to give you a holistic view, there are many other frameworks. For example, we use SOX compliance. It's also a framework for managing the internal controls over financial reporting. Then we have ICFR. Internal control of financial reporting is specifically other than SOX. Then in the banking sector, financial services sector, we use Basel 1, 2, 3. There are different versions of that as well. So there are multiple frameworks, and sometime it might be mandated by the law or by regulation, but mostly it is optional how you use it. So this is the end of of our today's discussion, and by this we are somewhere close to 85% coverage of the entire CIA course. And the last one, which is remaining, the last unit 10, which is about fraud risk, which we will cover, and then you are good to go to have much more practices and hopefully appear in the exam, and you might be able to pass it as well. Remember me in your prayers and make dua or make prayers for me that I continue this series till I complete at least all 3 parts. And I try my best, but have personal and professional commitments, due to which it's a bit more challenging to prepare the entire course. But hopefully, with your prayers, I would be able to accomplish this objective. Thank you for watching, and hope to see you in the next video.